guess first and foremost, pleasure to be joined by Daniel, Angela, and Ernest on the panel today. You can see their faces on the screen there. I'll give them a chance to introduce themselves in a second. In terms of myself, my name's Jack Thiel. I'm the APAC commercial lead at Mayday, and very fortunate to be trusted to host all of the sessions in this series. I'm an accountant by trade. Started my career with PwC. Spent some time in local advisory / accounting firm at the height of Xero's growth, probably 6-7 years ago now, whenever that was. And since then, I've been fortunate enough to work in and around the accounting tech industry. So now working at Mayday, obviously. And it's a really exciting space. I love it. Pleasure to be part of it. Really cool to see kind of the growth of Xero in this upper end, this kind of medium to large business market. And I've learned a lot over the past 12 months in this space, having these conversations. In terms of Mayday itself, we're for larger Xero businesses. The majority of our customers have in-house finance teams, such as Angela and Ernest here today. Our mission is to automate month-end, starting with the needs of multi-entity businesses, so recharges, cross-entity bank reconciliations, AR and AP matching, and keeping intercompany loans in balance as well. We have over 225-star reviews on the Xero App Store. We won Emerging App of the Year last year, and are really thrilled about the opportunity to be supporting such an amazing customer base at a very, I suppose, timely time. You know, it seems to be kind of the height of this challenge of dealing with multi-entity businesses on Xero. So we're glad to kind of be providing a solution in this space. In terms of the sessions themselves, you know, we've been talking to our customers since we were born a few years ago. And something that we've learned is that there's a lack of content or a lack of education out there for these teams, and a lot of people wondering, is Xero still the right system for me? Can I scale with Xero? If I can, how long for? You know, will it be indefinitely, or is there eventually going to be a time where I outgrow Xero and the ecosystem? Naturally, when people don't know the answer to these questions, they act earlier than maybe they need to. So they jump to an ERP. It's an incredibly expensive experience, time-consuming to implement, and the result often isn't what they had hoped for. And that's before 58% of these implementations end up failing anyway. So what we've come up with is the idea of ER peace of mind, the peace of mind that you can continue to scale with your accounting system, with Xero, into your growth phase, well beyond where maybe you thought originally that you could. And so we aim to provide you some of that peace of mind through this series. And so we'll have some interesting conversations about that today, actually, because I know Angela and Ernest have both looked at the ERP space and are at different stages of that journey, and have really pushed Xero to its limits as well. So, and I'm sure Daniel has been on the other side of that too. So we don't want to write one myth and say, hey, we want to bust the myth that you can't grow on Xero and then replace it with another myth that Xero's for every business. We know Xero's not for everyone. We know there's going to be a point where you might outgrow it and you need to move. But we think there's a good chunk more in the platform than people realize. And that's really what we want to try and cover off in this series. So before I go any further, I just want to chuck up a very quick poll to understand where everyone is at in this journey. So first and foremost, launching this one on screen now, you should see it pop up if you can just take a second. So do you currently use Xero? I guess we're wondering from the audience who are here, are you all Xero users? It looks like you are, which is great. So thank you very much for responding to that. And then the next one I'll chuck up is just around the size of the business or size of the group that you're in. So let me chuck that one up now. You should be able to see that there. So there's a little bit of context. Angela, I think you're saying you got 250 Xero files that you're managing at the moment. Ernest, how many on your end?
I'm between 11 and 30 myself.
11 and 30, which is still a pretty significant group. Okay, cool. We got a good mix here. A few 2 to 5, 6 to 10s, a few over 30, which is awesome. Okay, cool. Thank you for that. That just helps, you know, in terms of the conversation and where we kind of focus our attention. So yeah, that's enough from me, I guess, for now. I'd love to hand over to our expert panelists to introduce themselves. So Daniel, I'll hand over to you first. Go for it.
Cheers, thanks, Jack. So hey everyone, my name's Daniel. I'm a partner at TheBeanCounters, and we're a boutique firm that really specializes in helping finance teams make their lives better. Whereby essentially looking at implementing new systems, new tools, or even just providing CFO advisory to kind of make life a little bit easier. So automation, process improvements is where we really kind of, butter our bread. In a previous life, like most of my professional life, I've been on the finance team side of things. So, I worked my way through as an auditor, finance accountant, senior accountant, finance manager, finance director, all the way through to CFO. So I'd like to think that I've been in the trenches, I've seen the pain points, and I'm hopefully at a point now where I'll help a lot of you guys, a lot of the people on the call, to hopefully avoid the mistakes that I've made in my previous lives.
Brilliant. Thanks, Daniel. Angela.
So hi everyone. I work in the you call in-house finance team for Salter Brothers. Salter Brothers is a Australian-owned global fund manager. So we focus mainly on hospitality real estate. Hotels form the core part of the property business. So we operate hotels and own hotels. We are one of the largest hotel owners in Australia. Our head office is in Melbourne. We've got offices in Sydney, Brisbane, Singapore, and soon in Japan. So I oversee and monitor the day-to-day operations and the key processes in finance. So this include document the process, develop the process, improve the process along the way.
Cool. No worries. Awesome, Angela. And Ernest.
Hi, I'm Ernest. I'm the financial controller at Carbiz. Carbiz is, I think, one of the largest accident management rentals in Australia. I think we're the best. Hope you never need us, though. So we manage a fleet of rental cars across Australia now. And if you've had an accident and it's not your fault, we'll take care of everything from the repair to court case if you have to. We have grown very quickly. So I joined them only 18 months ago. And, we've gone from, 50 to over 200 employees now. And small business Xero, now we're a large reporting entity with lots of Xero files with all the problems that come with audit, consolidation, financial reporting, management reporting. And so I'm trying to get all that up to date so that we can, I guess, move into the enterprise future happily. So that's some context.
Brilliant. Cool. Well, thank you all for obviously joining. And, as I've mentioned before, I know it's going to be an interesting conversation. So without any further ado, I suppose, keen to jump into this and get cracking. So I might start, Angela, with yourself. So, maybe even we haven't discussed month end as a topic. I think, it's maybe, on Friday, we've got a session on consolidation, and it's quite clear what consolidation is as a workflow in a business. But when we talk about month end, what does that kind of encompass for you? Because it probably encompasses, quite a lot of things, but then maybe we can narrow it down in terms of what were some of the bigger pain points that you're dealing with at the end of the month or part of the month end process before you started looking at solutions within the Xero ecosystem.
So I think for us, there's a couple of things for month end, because we are such I wouldn't say a large group, but sort of a large group of entities. And our business sort of divides into a few different business units. So then we obviously do recharges and reconciliations in between each business units, and then in the business units between each entities. So traditionally, we would be exporting data, work out recharges, reconciling between entities, import back to the entities to recharge, and then rerun the balances to make sure everything matches. And that's and we've got it's becoming more challenging, because as the business grew and more business units were joined, we have different people managing different groups. So now it's no longer just between entities, it's also between different people managing their different entities, and then some entities may be closing earlier than others and all that sort of stuff. And then the second one that is probably more to us is managing the non-financial data. So for us, managing hotels, hotel rooms, for example, hotel rooms available, number of guests having breakfast, all that sort of stuff. We also track and report. So to use Xero to manage that is sort of not we don't have a solution in Xero to record non-financial data. So then we keep that data somewhere and manually consolidate into reports. So I guess that's probably two obvious points for us.
Yeah, okay, no worries. Yeah, so there's the splitting up of the financial information that still has some challenges to it, or there's some pain points there across a group of your size, and then there's maybe some more significant challenges you haven't yet got a solution for around the non-financial stuff. Daniel, I mean, from your experience dealing with groups on Xero, what do you kind of see as some of the bigger challenges, bigger pain points that they're dealing with when it kind of comes to month-end close time?
Yeah, I mean, a lot of it really comes around that whole concept around intercompany and consolidation. I know you kind of mentioned that earlier a little bit as well, but where the real pain points I'm seeing is, you've got different types of intercompany. You've got just the simple invoicing different entities and making sure that that all gets recorded appropriately so that, there doesn't cause an intercompany break and you can eliminate correctly. But what I've also seen happen is, at a construction company that I was looking at a while ago, the way construction businesses work is like they don't have just a single, they set up single entities for special purpose vehicles that may be only alive for 2 or 3 years for the life of the project. When you're consolidating so many of these ones, they're like there may be 5 or 6 operating entities, and then you've got hundreds of these special purposes ones. Each of these ones may also have different ownership structures. So you've got, some of them which are equity accounted, some of them which are joint ventures. Being able to make sure that you account for each one appropriately so that when you do the consolidation, the right numbers appear is where people kind of fall apart. When you don't have a kind of like an overarching view or a system that kind of like captures all that data, it's very easy to miss these intercompany transactions and causing breaks in your intercompany reports.
Yeah, okay. Yep. And so among that intercompany, you've got some other challenges there that you've mentioned. I mean, we were talking before this call started, Ernest, you actually had quite a nifty solution from a chart of accounts management perspective that I thought might be worth mentioning to anyone who's listening today, because, as you start to work across multiple entities in your group and you've got intercompany transactions and then you've got intercompany loans and you've got consolidations, obviously having kind of that consistent chart of accounts is useful. So, Ernest, I know this is something that you've spent a little bit of time working out.
Yes, and you're going to make me an Airtable salesman. So I think, yeah, so I think Angela mentioned, so I think I've come from practice, and when you have practice, you have a DMS. Where do you store all the information, all the contracts, everything? And when you're in practice, you have a document management solution. You have reporting structures. You know where to keep everything. So for us, that's been Airtable. So Airtable has amazing APIs and everything. So like chart of accounts, we have a group chart of accounts that is the centralized structure of all the COAs, the naming conventions, like all the categories, and that is synced to all our different Xero files. So if you want to insert a new chart of accounts, how do I make sure that the numbering and the naming and, is it capitalized, is it spaced, goes across everything? That's what I do for Airtable with Airtable. Okay. So yeah, I would recommend Airtable.
And that comes in handy when you're consolidating primarily, or just daily? So I think nice to have consistency.
So a lot of the pain points for me with multi-entity is as you become an enterprise, I think abstraction becomes a problem. So, how many levels of authority do you have between head office in New South Wales and, WA, general manager, when you're used to existing in a Xero file where every single user could talk to each other in an office. So it's really hard in multi-Xero to institute enterprise abstraction. And so Airtable allows us to have, a centralized store of so many things and keep like abstracted users and heads of departments. Yeah. They don't need to be in Xero. And I think, small businesses, everybody's in Xero. And yeah, so that's.
Yeah, no, good. And I mean, I think this is a topic we've mentioned or something that comes up a lot when we're having these conversations with larger businesses on Xero. And I won't go into it now, but like the idea that not everything needs to be in Xero, I think is a big kind of core premise to understand as you grow, which is transactions don't need to all be there. It can be daily summaries from certain systems, things like this. so that you can kind of push those zero limits a lot further than maybe you would otherwise. I mean, so if we kind of move, you've already started getting to solutions, which is great. So we've started to talk about how you can use something like Airtable to create that consistent or manage consistent chart of accounts across the group. I mean, Angela, you spoke about some of the challenges there. Maybe we focus on the financial side of things. What are you kind of doing, looking at? What have you implemented to resolve some of that stuff when it comes to month end? What's the outcome for you there in terms of maybe time saving, that kind of thing?
Yeah, well, Mayday is one of the obvious ones. So that was one of the latest edition this year. We implemented Mayday to a few of our groups that sort of does the intercompany reconciliation more than other groups. And then there's a couple of groups that we think we could definitely use Mayday, but the people resource is sort of restricting that to be implemented at the moment. So previously, yeah, like I said, we would export the data, work out the trade charges, reconcile between entities, and then you'd go in and out of Xero, export the report, going back in, trying to do the entries sort of thing. Whereas with Mayday, I think you could see that balance on the two different accounts in the same screen, and then some of the accounts are matched off, the others are not matched off. It's very obvious. It does half the job for reconciliation for us. And then for recharges, it saves so much time to not have to go in and out of Xero to raise the bill here, raise an invoice there, sort of thing. So that's a big time saver for us. And then in terms of consolidated reporting, we, as mentioned in the previous chat, we use Calxa for that reporting. So our chart accounts may not be as neat or as sort of standard as we'd like, but with Calxa, we could build report trees outside, and then the report trees could, we have reporting to investors, reporting to bank, reporting to set accounts, and reporting to everybody else. So with the different account trees, that sort of helped us with the consolidation reporting. I guess that's two of the most standout sort of plugins we have for Xero.
Do you see these kinds of apps as we're doing it because it helps us, close month end earlier, or because if we didn't have these tools, we literally wouldn't be able to get this stuff done in time? Or how do you see it?
I think it's a bit of a both, I think.
Yeah.
So for consolidation reporting, for example, we wouldn't be able to, I guess, have a business if you don't have a report for the bank when they want your report, right? But in terms of the intercompany recharges and reconciliation, I think we could live on Excel, but that also means people are less happy to do these reconciliations, and we'd spend forever doing it, and we'd spend more money putting on more people doing it. So that's sort of, you can live without, but would you live without?
I mean, Daniel, I'd be keen to get your thoughts on this. You work with other businesses, you help them implement tech. This is broader than just month end, but maybe try and, think about it from a month end perspective. If someone says, look, I could probably just keep doing that in Excel, how do you view that? Is that often a decision you're weighing up, or is there a mental energy that you need to think about there, that just the fact that it's in Excel, or a delegation component that means it's harder, the risk associated with it?
Yeah, so absolutely. I mean, I think what I'm seeing a lot of people doing is because, like what Angela mentioned, sometimes you need to have very specific reporting for different people. Like what you do internally, what you can pull out of a standard Xero report is can satisfy maybe one or two audiences. When you've got 3 or 4 audiences that you need to do at the same time, you need to do 5 different reports. It's the same numbers, same net profit, but you got to present it in 5 different ways for 5 different audiences. What they end up doing, and when you've got multi-entities, what they end up doing to get that flexibility is download everything into Excel, manipulate it as you need it, and then send it out, take screenshots, make it look pretty, copy and paste into PowerPoint, PDF it, and call it a day. That is time consuming, and that's where I see a lot of the errors come from. So people, the reason why they come to us is like, we reported the wrong numbers to the bank because one formula wasn't right in Excel. It's very susceptible, unless you're very comfortable with Excel and you build all your checks and balances in it, which most of us do. All of us accountants are born and bred in Excel, but there's always that time where something goes wrong, a report breaks and you weren't able to copy paste, someone went on leave, or even just a simple case of when there's succession in the business, people leave the firm, the new people come in, they don't know how to work those in. So those manual processes is where it kind of really opens up to a lot of problems. So it's there. People still want to use Excel because they want that flexibility. They don't want to let go of that one completely. But where we're trying to push these guys into is to build a process, understand the outputs that they need, and utilize these tools like Calxar, and like Mayday, just essentially remove the manual, take the risk. You know, I've always kind of worked on this whole concept around a Murphy's Law. If it can go wrong, it will go wrong. So try to remove that even possibility.
Yeah. And Ernest, I know this is
Excel is actually banned. Like Excel is actually banned for any report that exceeds 50 rows must be moved into something better than Excel. So I accept Excel for point. Excel is amazing for point in time. We have to do that calculation now and communicate it, but it's for a throwaway report. If it's going to be a report that is used by management consistently, we put it into some formal automated system. So I think where I come from, most of the things that we struggle to do in accounting, especially in high growth businesses, is documentation. Nobody ever writes documentation for the Excel spreadsheets. And that means when that person leaves, or the new junior hard code something in tab 20, row 111, how do you review everything? So ongoing reports have to be moved into formal management reporting systems. So that's the same thing with Mayday. Why do we use Mayday? Because that reconciliation, like we accept that, say, you are taking the time to think about everything. We accept there's trade-offs, but you're maintaining your documentation. I send my team to learn your manual. I don't have to learn a manual. And so the same thing with Mayday, Calxar. Numeric is our big month-end, like our month-end close tool. I'm just saying, I don't want to write documentation. So we must move. If we're not going to write it, then we move somewhere where we can put somebody in and they read the manual and they do it the same way, every month, on time. Like, yeah. So no Excel.
Love it. I mean, I don't know how many people listening here feel like that's really achievable, but I think I think the message is there, right? Which I think you're all kind of saying.
My goal is continuous accounting.
Yeah.
I think it's like the dream is continuous accounting, and you cannot achieve that in Excel. Like the bank feed is live. Everything can be live, you know? So like if you automate it, continuous accounting is the goal.
No, it's good. It's good. And I mean, so kind of pivoting now, taking the discussion in a slightly different way. I mean, we've spoken a little bit about some of the pain points and challenges running a multi-entity group on Xero when it comes to month end, when it comes to managing intercompany loan reconciliations, accounts receivable and accounts payable issues. We've got recharging processes that are just, it's just a time-consuming process or it's based in spreadsheets primarily. So there's a few things out there that are causing challenges along with reporting and consolidation. So that we'll cover in a separate session later this week. Then we start to talk about some solutions. Obviously, you mentioned Mayday, we've mentioned Airtable, Numeric. I don't know if there's any other apps that you guys are kind of using, just to mention them without going into detail on what they're doing for you. But any other things you would consider to be month-end tools that you're using?
So I think, can I go ahead?
Yeah.
So for me, I think about what will get me to continuous accounting. And so the idea of subledgers is very important when I think about where does Xero sit. So Xero to me is the best internet connected cloud GL. Like Xero's GL just works. It's easy to use and it's pretty and it's fun to use. But then what quickly goes enterprise? Payroll. So payroll is such a big part of month end, payroll journals. So we use KeyPay. I think I prefer KeyPay, but it's Employment Hero Pay now. But KeyPay, so we move everything that's been moved to a subledger that can produce an instant report that is a PDF that goes in my one, like no calculations. And that's the tools that we use. So payroll is KeyPay. Invoicing we built in Salesforce. Bookkeeping team. So bookkeeping is the foundation of accounting. I think that's, I always stress that. So our bookkeepers are in Expert, which is just ensures the bookkeeping quality is just being smashed through. Approvals are in Approval Max. And then our month-end close, the financial accountants are in numeric. They're not logging into each individual Xero file. And then Mayday is like, particularly AI. I love the AI AP thing now because I only used to have my month-end loan accounts now, but now I know that the dates are different in the intercompany invoices. So it's so that's my core month-end stack. Yeah.
Cool. Any others to add to that, Angela?
Well, we're looking at a sort of a AP plug-in, but that hasn't happened yet. So we're looking at an AP thing and an expense management system, because we find we also need to close that for the recharges to happen correctly for the correct period. What we use Approval Max as well, but the amount of entity is proven to be a costly exercise.
Sure.
Yeah, so I mean, Ernest pretty much covered most of that off. And what Angela said, like an expense management tool like Wheel is like great in terms of
Wheel.
like, so Wheel's also, that's a fantastic way to kind of like push the responsibility of the coding down to the the users, the salespeople, the people that are running around on the floor. So it's not the finance team stuck with the bottleneck at the end of the month and trying to ask a partner who's flying on a plane somewhere where what this specific expense is. So trying to get that kind of delegate that work out. I personally love XP&A. So back in my kind of financial controller kind of days, but I trust the numbers in the fixed report, but I always want to drill down. I always want to be able to drill down. So Ernest, you might get a little tense about this one, but it's an Excel add-in that's like a smart view. But what I use it for is more of like an ad hoc reporting tool where it's like it refreshes, it pulls data directly from Xero, multi-entity, consolidates all. You can run reporting trees, chart of account trees as well as you need, customize the view as you need. It gives you a P&L that you like to look at in a way that you want to look at. And it's a double click drill down type action where you go all the way down to the transaction. So it helps me kind of like fire up at month end when the ledgers are closed, find out what numbers look a bit strange, drill down to the transactions all within my Excel, run quick calculations, run quick little reports, screenshot into emails, fire it off to different people for them to kind of check and balance for me. So XP&A is it's a relatively new one that's out there. It is Excel. It's all Excel, so you need to be super confident with your Excel. But if you are, I think of it just as an extra tool in your back pocket to play with.
And I think this is one of the key things around when we talk about Xero's ability to scale with you is obviously the ecosystem of apps is a big part of being able to do that, and it's continuously evolving. So you mentioned XP&A, relatively new one on the block. Mayday's 2.5, 3 years old. So, if we go back 4 or 5 years, this is a completely different conversation around the tools that you might have access to. So I think if you looked previously or you were in a previous role and you didn't have a solution for this and thought inevitably I'm going to have to go ERP, just double check there's not solutions for this stuff now. I think a lot of businesses are making it work with Xero Plus ecosystem where maybe 5 years ago they couldn't. But in saying all of that, I want to make sure that we don't, leave everyone thinking Xero's for every business forever. There's nothing else that you'll ever need. Like Angela, I know where you're at. You're kind of already in that journey, knowing that it's inevitable that you're going to have to move off of Xero. So can you talk to us a little bit around that? So why, but also what you kind of mentioned it earlier before this call started around what you're kind of expecting to maybe have to give up as part of making that move, that it's not just, sunshine and rainbows on the other side of that journey.
Yeah, so we are looking at moving all our entities, well, most of our entities, if not all the entities, into NetSuite. The reason for the move, I think, mostly we bought some new retreat hotels, I think last year end of last year or something like that. So previously, most of our business runs on, we have a hotel operator operating the hotels, and then they gave us a TB at the end of the month. We import the TB, and then we do a bit of journals here and there at our end or some billing to bring that up to scratch. And then we invoice sort of management fees and trustee fees and all that sort of stuff. So it's all been sort of manageable in Xero. But then after we bought those retreat hotels, we decided to become owner-operator. So then it becomes the question of, would you run a few hotels with restaurant and bars through Xero with all the sort of wheels and all that sort of stuff. And then also there's going to be inventory requirement, and then there's going to be lots of sort of casual people sort of stuff as well. So I think at that point it becomes clear that it was too much of a challenge to run on Xero, and also that the amount of entities we have, the amount of money we pay to Xero, we're probably actually saving money to move to NetSuite, because you know, for Approval Max to run, it's an entity based, and a lot of the plugins are the entity based price. Where for us, adding one hotel or one hotel group means adding 30-40 entities. Like that just didn't work in terms of cost as well. In terms of the part that we miss about Xero, I think moving to NetSuite, even though NetSuite is sort of user friendly enough, but it's not as user friendly or as straightforward as Xero. So in Xero, you could just, I'm going to add this, and here they're going to direct me to next step. I'm going to fill all the information. Whereas for an ERP system like NetSuite, I think it's more just you actually have to go through the training to see what's step one, what's step two, to not have something that potentially fall over. The benefit is sort of you get the consolidated view instantly. You don't have to sync up to any reporting packages. Once you put in the journal or something, it's all instant. And then also we don't have to have the problem of adding a supplier, 50 times just because that's a supplier for the group. Whereas in Xero, you'd have to sort of be in and out 50 times for that to happen. And then the downside, I guess not so much of a downside, but in NetSuite, we have to run one unified chart of accounts, where for our business, as said, we run a few different business units, and they don't have a lot of the stuff in common. So one of the challenges that we're going through now is to see how we're going to manage merging everybody into sort of one platform. And also the fact that you'd have to, every time you have a new user coming in, you really have to do the training and sort of walk through the process to see where you're going to go. Whereas with Xero, it's sort of user-friendly enough and straightforward enough to not worry about stuffing up as much.
Yeah. I mean, I can understand. I mean, 250 entities is pretty unheard of. So, you've done a good job to make it work with Xero, as long as you have. And I think that's kind of to the message that we're trying to get across here, which is if you're 10, 15, 30 entities thinking, I think this is maybe becoming a bit, there's a lot of room still there if you need to make it work, or if, another year or another 2 years is going to allow the business to focus on growth or acquisition or whatever it needs to focus on. I mean, Ernest, maybe this is kind of, you can speak to your own experience here. You're in a fast growth business. You looked at ERPs and decided, at least at the time, no, let's make Xero work and let's do it longer. So what was the decision there? What was that process like? Where are you at now?
So I think I want to delay the point at which we have to move to an enterprise ERP as long as possible. And I'm hoping that in that delay, Xero will become better and better, which it does. So I think I have more important things than to potentially have a failed ERP migration that could take 6 to 18 months. And so I think the quotes, I don't have 250 entities, nor will I. So I think for me, the costing is almost insanely different. Whereas, quotes for implementation look to be between 100 and 60, and that means 200 because salesmen always lie. And then ongoing fees, I need asset management, loan management, in the NetSuite world, you have to build everything yourself or accept, trade-off like J-curve, which, and so every module is costing 5,000 per user. And so I'm looking like, I can get $1,000 a day consultant to help me build work papers. I can do additional engagements with my auditors. And so Xero plus subledgers, enterprise level subledgers in many cases that are now, so a lot of enterprise apps, say like Asset Accountant, work with Xero. So a lot of your app stack will work in the next iteration up. And so I'm very much, if you reduce Xero to just a GL, just a clean GL, and you handle the little annoyances, like user management is a real pain in Xero, but I've got my accounting firm to give me, practice access. I found a little, small firm where I'm a big enough client. And so I have practice access and I can add all my users. There's a lot. I want to stay in Xero because it's better with my Frankenstein ecosystem than what I need to move to and pay for. And yeah, that's where I'm at the moment. But I will eventually be forced into the enterprise, but I will only go when I'm ready, and potentially I'll try and self-implement because my chart of accounts will be perfect. My work papers will be perfect. My procedures will be already written. Because the thing that is forcing me to think of enterprise is one of the hardest things with maintaining a Frankenstein ecosystem is finding accountants who wish they were devs. I think, when something breaks in your little domino and its API is gone, and you need that senior accountant whose eyes get excited about fixing APIs and, going into Xero app settings, disconnecting and reconnecting, so that's probably the hardest thing to find in the industry at the moment. That accountant who is happy to help you maintain your Frankenstein. But otherwise, Frankenstein is more powerful than NetSuite. Yeah.
Yeah, and this is I think this was something that I've learned as well, having these conversations over the last 6-12 months, is I think that, at least for me, there was maybe a misconception that like it's going to be better on an ERP. It's just expensive and takes a long time to implement. But more and more people are saying, I'm only going because I really have to go. It's going to be more expensive. It's going to be time consuming, or maybe not more expensive, to Angela's point, where certain
we're
scales,
actually saving money to move. But I think it just depends on what business you run.
Yeah. I mean, Daniel, it'd be great to get your perspective on this as well.
I love Ernest's perspective in terms of that. Like I said, the Frankenstein approach, I feel like this generation of accountants are more comfortable with the whole, you utilizing, the web-based platforms to kind of connect and disconnect items. In terms of like the multi-entity, like where what I personally think are like hard lines where you got to seriously consider moving to an ERP are going to be things like multi-currency. If you've got entity and ownership structures that are outside of Australia and New Zealand, if you're in like different jurisdictions who have very particular, like if you have an entity in France, you've got a very particular way, like it has to be, your ERP has to be signed off with the French government. You've got to have a very strict chart of accounts. You must use 1001 for this specific GL code.
Yeah.
So all of those ones are kind of one where they're hard lines, especially, and also things like when you're moving into different countries, you're moving into different tax jurisdictions, which will then cause its own kind of problems. It's no longer what I'm also learning about is like, in Australian BAS, everyone loves to do a BAS statement. If you see the equivalent VAT reports in other countries in Europe, in the US, you'll want to tear your heart out. So tear your hair out. So you definitely want to, that's like that. I would say those are like real hard lines where you need to start considering. More internal.
One of the foreign exchange broke us as well, because we had a Singapore-based entity using Singapore-based currency, but using an Australian credit card, paying in Japan. So trying to reconcile that credit card at month end is, you have to convert everything to base and then converting it out. That was
and you don't want that there. And that's when your financial account quits and you end up holding the bag. For more internal kind of things, like I think I said, there's so many apps. Like maybe 3 years ago, I would have said, go to an ERP so you can do some reporting out of NetSuite. That's kind of like inbuilt into the system. But with all these new tools that are out, like what Ernest says, a lot of these ones you could probably solve. Any questions you've got right now, you could probably solve from a reporting perspective with the tools that are out there. The only one where you might kind of start falling over is when you're looking at the different dimensions. So, Xero's tracking categories, 2 tracking categories. You can have as many as you want within those 2 specific tracking categories. All your mid-tier ERPs, NetSuite, Sage, all those ones, they come with 5 generally, like you've got your location, you've got your entity, you've got your project code, you've got your customer, all these dimensions. They also allow you to add user-defined ones. So if you're very particular reporting, and as I said, majority of Xero businesses will never need this, but when you get into that slightly larger space, when you start getting purchased by private equity and they're stitching a coffee business with a equipment business, that's when they'll probably want an additional kind of tracking category or dimension for you to report on. And that's where it kind of gets hard doing that at Xero levels, because if the data's not there, you can't report on it.
Yeah. No, good.
I actually on the data one, I actually I think Xero is just one of the data sources for us, and it all goes into cloud warehouse, data engineer. And so that sort of ad hoc detailed reporting happens away from the accounting team, unfortunately, and that's been our solution. We have an FP&A team, data engineer, and the finance team has to accept that we are not data analysts. We submit our data to the warehouse, and then they can merge it and do their magic.
Yeah, gotcha. Right. But so let's say an invoice, you wouldn't be able to code like 5 dimensions to a single line item invoice type thing. You'd have to do that outside.
So let's say with car invoices, we purchase cars, the fleet team need to know it's blue, it has tires, floor mats, so they can price it, but that's not on the balance sheet. But our invoices are ingested, and like nanonets is an example of one of the things we use. And so you can extract, data is shared, and the accounting team gets their data, and the fleet team gets their data, and the data analysts get their data. Yep. So the data is just like we know who gets what and who needs what, but the GL is not where you should do your primary data analysis.
Yeah, got it. Yeah, no, that's great. Like if you can differentiate, that actually makes life a lot easier, because obviously your finance team doesn't need to code it, which is paying off their
backs. So same as chart of accounts. I think I limit my P&L to 60, no more than 60 P&L accounts, just because again we just need to close and move on. Financial accounting, management accounting, and data analysis, do it somewhere else.
Yeah, beautiful. So that's like, if you have the luxury of being able to differentiate that is like prime and beautiful. Unfortunately, you're probably going to see a lot of these mid-tier ones where they're owned by these private equity firms that kind of stitch up. They would want to be like, give me a P&L of the cars that are blue, and I'm like, come on, like what's going on? But they want to do that because they want to start carving things out, selling it off to different businesses, and that is where it really hurts. And I found that's where the businesses are now. Xero businesses that have grown, purchased by PE funds that have big stack of cash, and they want to cut things up in really strange ways that makes accountants like us cry.
That might be part of us.
I might start to wrap it up, guys. We've got a few minutes left, and the Q&A is open to anyone who's tuning in. Obviously, we've got some great people here who've been through this stuff before, so take advantage. Feel free to ask questions, and we'll throw to those in a second. Obviously, for anyone who is tuning in, who's running a group on Xero, who's dealing with any of what we talked about from a month-end perspective, intercompany recs, AR/AP recs, recharging, reconciling transactions across the group, that kind of stuff. If Mayday is relevant, we're not doing any demos as part of this series. We want to keep it educational and all that kind of stuff. So I'll just chuck up a poll now, just in case there's anyone out there who would like us or like me to reach out, and I can touch base separately to kind of hook up a time to chat. But while that's up, please feel free to throw questions in. If you've got any, we'll answer them, and then once we've answered those, we can throw to kind of wrap things up. Look, maybe Daniel, Angela, and Ernest, is there one kind of takeaway that you'd be happy to give us from today? Maybe something that one of the others have said that you kind of think is just a really good piece of advice, something for everyone here to leave with.
For us, we manage. Oh,
go ahead, Angela. No, go ahead.
Okay, sorry. Yeah, for us to on the user point, so we use Xero HQ to onboard and offboard stuff. So instead of adding a user into 10 entities, we use the Xero HQ to add a staff, and then to add all the entities into that staff. So basically, your onboarding is going to take a split. Wouldn't say a second.
How did you get access to Xero HQ as a corporate? Tell me the secret.
Well, we asked for everything to be linked through the one entity. So then, because we didn't want to have like you have to log in out. So then they gave us access to HQ to manage our little group. When I started here 5 years ago, the little group was probably 100 odd entities. Now it's becoming 250 and it's not stopping. So yeah, then after you ask, they assign you like an account manager, and then yeah, it's a lot easier to, you know, onboard an auditor, offboard a staff, all that sort of stuff. So yeah. And then I'd also suggest, yeah, to establish clear accounting process and workflows to ensure consistencies for all the entities. So you could use something like Airtable to manage, or you'd have to have a process somewhere so that everyone sort of manages it consistently, and or maybe to the 80%, 90% mark of consistency.
Yeah. Cool. Daniel?
Good. Just from my perspective, like the way I see it is like, you know, great examples by Angela and Ernest in terms of like hold off as long as you can. And one of the best ways to kind of hold off is the fact that Xero apps are so easy, and it's so easy to turn things on, spin it up and turn it off if it doesn't work, if it doesn't do what you need it to do. So like definitely practice. Not everyone's going to have the luxury of having a dedicated project team. Everyone's got month ends every 30, 31 days, right? So you don't have the luxury to go sit there and just play with a massive stack. So, but what you can do as an accountant is literally go onto the App Store, turn something on, see if it solves that problem. If it doesn't, turn it off, go find something else. That's probably what I'll kind of do. Do these small things before you start looking at the big projects.
Yeah, great. Ernest?
I reckon have a go. I think the number of accountants I know who've never actually, you know, just Googled Xero Marketplace and just, you know, hit the top down on five-star apps and just see what's out there. Because I think that's probably there's probably a solution out there for what you're struggling with. So have a go in the Xero ecosystem.
Also, if you join groups like this, other people might have their tax stacks. That's how we found Mayday, by an email from Kaxa saying, "Hey, have a look at this." So once you find the ones you like, they recommend other ones. You might also like them.
Well, I mean, I've been to a few different Xero events, and they often poll the audience to say, you know, how many apps are you using? And the vast majority of people are using no additional apps or one additional app. And I think if you're big enough to have multiple entities and one or two or even more in-house finance team members, it probably means there's a lot of opportunity to be going deeper than that if you've only got one add-on or maybe none. Sweet spot seems to be somewhere in the like 4 to 8 mark, depending on your needs, you know, whether it's a spend management tool, like consolidation tool, intercompany tool, but there might be a couple of other things that you need as well. Maybe you need an AP tool like Angela's looking at, or a financial controls tool or something like that. But not everyone needs the same ones, but there's probably a good core out there that's not hard to find. And, you know, sessions like this hopefully help to kind of provide some visibility over those. So beyond that, I will just very quickly kind of wrap up by going over the remaining sessions in the series. So tomorrow we've got AP and financial controls with Approval Max. Wednesday we've got spend and FX management with Airwalks. Thursday, HR and payroll with Employment Hero, who Ernest mentioned today, and I think Approval Max was mentioned by you both as well. And then Friday we've got consolidated reporting with Join. So Join are in that same ballpark as you know, Calxa, Fathom, those other reporting consult tools. So there's a lot out there, and you know, that's great. That's part of the value of the ecosystem is choice. So you can find the tool that works for you and your needs. So feel free to come along. If you haven't registered for those, there's the link down below. But yeah, thanks again for your time. Really appreciate it. Angela, Daniel, Ernest, thanks so much for coming along and sharing your experience. And I'm sure it's been super helpful for everyone who's been listening in.
Thanks for having us, chat. Thanks, guys.
See ya. Bye.